All right, welcome to Turnaround Tuesday here live with EmpowerAg Trading. Thanks for joining us. Thanks for jumping in. We're back again to talk about your markets and things that we're watching for the week ahead, things that are happening right now, today. Invite you to be a part of the conversation. Drop us a question, drop us a comment, and we'll see what you got to say. You can be part of it. We can bring those comments and quotes right up here on the stage and talk about it and have a little discussion. So invite you to drop a comment below, leave us a message, tell us what you think. Today, we got grain market under pressure as we kick off the first full week of August. Crude oil has broken back below 80 bucks a barrel, and the stock market is putting on a heck of a rally here today. Good to see that. On the crop side, though, it's all about next week's August WASDE report. The countdown to the August WASDE is on. I'm going to ask you, what happens to U.S. corn and beans balance sheets next week in that upcoming WASDE report? Do they tighten? Did we plant more acres? What will the USDA surprise us with in the August WASDE report next week? I want to know what you think. Leave us a comment, like, subscribe, share. With that, I'm going to roll the intro, and then we'll dive into the show. Thanks for tuning in today. All right, thanks for tuning in today. I'm going to jump in, quote up your market here real quick, and run through some prices, and then we'll dive into the show and bring in our guest from agmarket.net, Connor B. We love him. But first, let's dive into your markets. All right, Dees corn is down 7 3/4 cents at 4.64 3/4. You got Nove beans down 18.5 cents at 11.73 3/4. KC wheat down 11 cents on the SEP contract, 7.06 1/4. New crop July 27 KC wheat down 11 cents at 7.37. Looking at your Chicago wheat, we're down 13 cents in SEP at 6.38. Over in your cattle markets, we got a nice little rally going in cattle with August feeders up 370 at 351.55. We're back above 350. Ayo! And looking at your fat cattle market, we're up 70 points on August fats. October fats up almost a buck here, 227.62 half. So good to see that. Some green on the screen in your cattle markets. In your macro markets, we got the Dow Jones up nearly 1,000 points, 970 firmer today in your Dow Jones, 54,304. Your S&P's up 132 points, and the NASDAQ is up 880 points. Stock market is moving. Crude oil down a little over $4 right now, 76 bucks a barrel on your crude market. And that's kind of a snapshot of where we're at in our macro markets. Paints a little bit of a picture for you. I'm going to bring him in, and we'll dive into our show here. Connor B., how are you today? Oh, hang on, Connor. You're muted somehow.
Can you hear me?
I can hear you now.
I think that's my fault. I think I muted myself because I had.
You're like the Verizon guy. Can I hear you? Can you hear me now?
Yeah. Turnaround Tuesday. It's ringing true today. A lot of whipsaw action. I think that a lot of people, I guess myself, I didn't expect to see quite such a bullish day yesterday, kind of on some outside news, and we're kind of giving it back today, aren't we?
We are. Yeah. It just feels to me, I don't know about you, but it feels like this market's chopping around, just kind of you trade weather and you trade some headlines. And then once these crop reports start creeping up on us, and then all of a sudden everybody's kind of, okay, we'll go up one day and give it all back the next, and vice versa, and just kind of chop around as we go into that report. Big report coming up. But first, how's the crop looking in Illinois, Connor B?
Well, I can't speak for all Illinois, but my area still looks really good. We got some rain over this weekend. We could use another shower to get this, seeing how August plays out. We need I'd say one good soaker, and we have a chance for some really good beans. But I still think we have really good corn out there as well. But the USDA in general doesn't have Illinois. We've got it worse than last year, which I think if you go north of me, if you go to that McLean County, Bloomington, that area, McLean County is the largest producing corn county in the United States because they have good yields. And if you ever look on a map, that county is massive. It's such a big county. But anyway, they're going to be subpar. And I'd say right now, I'd say the USD has it where we're going to be a little bit worse than last year, I think, for the whole state of Illinois. But at least for Christian County and for me, we got chances for some really good crops.
Gotcha. Yeah. So winding down, corn's what USDA had at 90% silking, so kind of past that pollination stage, early grain fill, uh, got some decent showers, I guess. Probably hit and miss out there, kind of feels like, but had crop conditions yesterday, slipped again on corn. What were they, steady on beans yesterday on crop conditions?
Steady on beans and slipped on corn. And one of those that it's very much turning into the haves and have-nots. If you're an Eastern Iowa farmer, it looks like pretty good. The state of Iowa is at 80% good to excellent. If I just gave you that fact, I don't think you're going to be bullish corn, right? That the largest corn producing state's at 80% good to excellent. That's pretty good. But then you get in, you in Kansas, especially the Dakotas are very much going backwards, especially North Dakota. And then also Illinois is kind of the same, not anywhere in the same boat as the Dakotas, but it's 60% good to excellent, worse than last year. So it's really looking at Minnesota and Iowa are definitely the winners in terms of crop conditions.
Okay. Yeah. Well, the bushels, and we talked about it last week too. How does that impact, one, just the overall national yield, but there's going to be pockets of good and pockets of bad. And when you have that variability in production, creates a dynamic basis environment where you're going to be maybe pulling some grain into an area that had some poor production. And what does that do to Illinois basis, Iowa basis? And as we rail corn out to the West, and is there pockets that have to really have a strong basis push to get that grain to move because they had maybe a production problem in a pocket of the world? So kind of, we talked about it last week, but something to keep your eye on over the next 6 to 8 months is that basis market and what could happen down there, and different everywhere, wherever you're at in East versus West, and pulling into Ohio or over the East Coast, all of it dynamic.
Absolutely. And it also, when you get that dynamic, when you're looking at your backyard and you're in one of those areas it's going to be worse than last year. We're not looking like it's going to be a great crop. Man, that's when the marketing gets tough, because if we're looking, we should talk a little bit about some of these yield models. I don't know what you've seen, but if we get a decent national crop where your backyard looks pitiful, I can't picture a harder grain marketing environment than that situation.
Yeah, it's certainly hard. And yeah, out on the fringe, we're definitely used to years where we can exceed our APH and years where we can fall well short of our APH. A lot of volatility in our yields as you get out into the fringe acres where I'm at here in Kansas, and was having a conversation with a producer here this morning about, his dryland corn and irrigated. He feels like he's well marketed on his irrigated, but those dryland bushels of, is this even going to make a crop? Is it 100, 120 bushel corn? That's a decent dryland crop sometimes out here in this part of the world. Or did we just completely miss on pollination as in that heat? And is it going to be needing chopped or something else because it's sub 50 bushels an acre out there? And it's hard to go make those marketing decisions. And I guess, yeah, we talk about it all the time about the tools you can use to do things, but the market's got to present the opportunity to go do it. And maybe a week or two ago when we were knocking on 490, that there was something the guy ought to go do, but you got to be on top of your numbers too. And it's hard. Marketing is, what do they say, Connor B? It's simple, but it's not easy. Is that the saying?
I don't know if it is, but yeah, it's you hit the nail on the head there, right? It can be simple, and usually simple's best, but my gosh,
it's never easy.
Yeah. Good.
Especially when it's burning up or you're melting bushels out there. So, and then the euphoric of it all is this thing, boy, we're going to $5, $50, $6. We talked about the call trade a couple weeks ago that caught a lot of headlines, right?
And it's funny you bring that up, because guess what that guy did? He's out.
He's out.
I saw, let me find it here, because it's funny you bring that up. It was, sold 55,000 no $556 calls at a penny and an eighth. So I can't remember if that's the whole position or what, but obviously we're lifting that. So if that guy was buying on the up, he decided to exit.
Yes. Well, let's hope that was against some sort of hedge that he decided he didn't need to put on anymore versus just an outright position. Because,
Right. I sure think that's what it was.
yeah, cool. Well, sentiment to change, they swing. We've seen a big trading range in wheat too. I mean, KC wheat out here knocking on $8, and you had some guys take some action. Hopefully, hopefully if you're in wheat country that you did some things to reward that rally. Opportunities they can come and they can go, and this market's just kind of waiting on the next one. I don't know that any of this has to be over. I mean, but it feels like those opportunities can be fleeting. I mean, KC wheat was 795, and here we are for new crop KC wheat, and now we're back 734, 60 cents lower than that high. So markets move quick, and I think you probably feel the same way I do, Connor. If there's a time to push guys in this market, there's a time to be patient. But what we really want to avoid is that time to panic, and that kind of drives me crazy a little bit. I guess if I'm going to get on my soapbox a little bit, is that panic positioning and reacting to that market of I'm oversold. This market's going to 8. Got to get out of my hedges, or I can't do anything. I need to reown, or after a 60, 70, 80 cent sell off of now I need to manage risk. Now I need to let's not get the cart ahead of the horse, and let's not panic into positions, I guess.
Absolutely. Yep. I agree.
Little preachy here though, Connor B. So I got a question for you. Next week's August WASDE report. How big of a report is this, Connor?
History says it's not one of the bigger ones, right? But I think this year, the different factors in play is we had that kind of late season dryness and heat that potentially affected yield, right? If we got 10 guys in a room, we'd probably have 10 different opinions about how much or how little it affected it. But in terms of that late season dryness, I think everyone's going to be paying attention. Where's the USDA going to have yield? We're seeing all different types of yield estimates. I think Stone. We'll continue to see a few more out. I think today and tomorrow, which are always interesting to see. And then the other big narrative with this report is where are they going to have corn acres? Right? Is there a part of you that thinks could corn acres actually grow? Right. Right now, I haven't heard a lot about potential for corn acres shrinking. I think the fear is that what if we planted 96 million acres of corn, and see where that could be a potential negative too. And so yield wise, I've seen estimates were as high as 185, 186. Right. If you're not following the national yield and you're watching, 186 is a bearish number, no doubt about it. And then a lot in the 181, 183, right? USDA is at 183. That is really, I think that 181 to maybe 183, 184 is really catching a lot of it. I don't know what you've seen. I haven't seen a whole lot lower. The bullish numbers start in 180, 179, 178. I don't think anyone's there yet, right? Time will tell. And this is by far and away not a nail in the coffin in terms of acres and yield, right? We're going to adjust it in August. We're going to adjust it in September. If you remember last year, the USDA found more corn acres on every report from here till January. And so it's absolutely not nail in the coffin or a change, but it feels like it carries some weight in my opinion.
Yeah, for sure. Yeah. The 180, what are we, 183 right now on corn yield. Ratings, though, were 61% good to excellent versus what were we, 74% a year ago?
Wasn't that here? Let me look it up because that's a good point to bring up.
Yeah.
Last year, so on corn we were 61% good to excellent. The 5-year average was 63, so we are below the 5-year average. And then I wanted to say it was closer to 70 last year.
Yeah, 70. I have 74 as good to excellent 74 a year ago this week here. But yeah. And looking back at last year's, USDA, I think they dropped the hammer in August. 181 yield was what we had in July, bumped it to 188.8, 7 bushel increase on yield, and then added acres too on top of that. I think they added 2 million acres of corn.
It was brutal.
So
it was brutal.
can certainly be an axe to the market. This August WASDE report has been in past years, has resulted in some nasty sell-offs.
Some big swings. And that, the other thing that's working against us right now, it's the month of August. We, we put highs in the month of August, I think in 2012. We might even did it late July. August is usually that's the time where the crop is either made or not. It's usually kind of just seasonally a negative time for row crops, for corn and beans especially, right? And so that's the other thing that's working against us. But I guess when we're looking at the USDA report, I feel like I'm probably coming off a little bearish. What if they raise corn acres? What if we see this monster yield? Let's be very clear. We're trying, any of these yield models and a lot of people are looking at the RMA data in terms of corn acres and comparing it to previous years, right? We're trying to pencil in and make it scientific. We're trying to guess what the USDA and looking at their methodology. That's not scientific, right? There's very much who knows, right? I'm not in the business of predicting USDA reports, so I think that's always important to keep in mind is that there's a lot of reasons we could go either way.
Right. Yeah. Who knows what they're going to print? And then the second case of that is who knows what the market has priced in and how the market's going to react to what is printed. Does it surprise the trade? Does it catch them off guard? Are we pricing, what are we pricing in right now on yield? Are we pricing in that 181 type number? We could probably go do some research and figure out where we're at. I'd argue that we're pretty close to a 11% stocks use ratio. That the market is kind of penciling that in. And if we dropped yield below 180, 181, even just a hint that we're going to drop yields down, and if we left acreage alone, that might be supportive, I guess, to say, okay, maybe it's tightening up a little bit. Demand has stayed strong, and there's hope that maybe this crop gets smaller. What's the saying? Big crops get bigger, small crops get smaller throughout the year. So that's the bullish carrot, I guess. We can have a bull bear debate, and at the end of the day, who knows where we're going to be? Who knows what's going to be right? The market's going to tell us who was right and who was wrong here in a week or two, and that's going to change anyway going forward.
Absolutely. And I feel like if you were asking me to do a bull bear debate, if we're looking at short term, right, in terms of fall, and I think that's if in terms of cash flow and what you can't store, that should be everyone's focus. I don't know how many weeks I've been saying that now, Brady, but looking at that term, right, bull bear, I could see us having a little bit more bearish tone going into fall. Post harvest, right? If you want to be a bull, if you're mad at everything I'm saying, we could see a demand-led rally. Demand is still good. You could make the argument by next year, maybe we got to buy some corn acres if we stay in this price or slide a little bit lower. And so I think that's important to keep in mind is that, what are we going to do the next 60, 120 days? But then also, January 1st, 2027, how are we marketing grain there too?
Right. Yep. No. Yeah. I love your point, and you've hit on it. Like you've said, cash flow and those bushels that don't fit in the bin. We got to pay bills. We got to pay bills. The banker, you got to pay your seed bill, got to pay them all. We got to pay bills. So you got to convert that grain to cash. More natural sellers in the market over the next 6 to 8 months. And at what point does the selling dry up where we can sit on it a little bit longer, manage that? Those are great points, Connor B. So keep your eye on China, though. We have a couple more flash sales here to start the week. That's good to see. Demand has been solid on the export front. We continue to see that. Ethanol's hanging in there. Probably gets revised down on the corn side next week, but exports largely probably offset that. So, and then we got a whole nother crop going in the ground in the fall too, Connor B. So we can debate it even more as to how tight global stocks are going to be, or will South America bail the world out and produce a banner crop going forward?
Right.
It never ends. It never ends, Connor.
It is. And it's always one of those where, maybe how you're going to market stuff, even 5 years ago, but I'll say 10 years ago, I feel like that you should look at changing that because so much of the price action we've seen in soybeans is in that November, December, January time based on what type of crop do we have out of Brazil. And so that's going to be a huge factor as well. It has been the past couple of years. I don't see why it's going to change.
Yep. So I think the takeaway right now here is don't paint this market in too small of a box today. Avoid the day-to-day headlines because there's a lot of things that got to play out going forward. Yeah, we're determining yield right now. We're getting some flashes of demand. There's lots of moving around with these pieces, and don't paint this market in too small of a box where how low it can go if we have better yields than expected, or demand stays strong and this crop tightens up. Beans are made in August. We're still filling grain. Yields are not set today, and we got a lot of year ahead of us here. So don't paint it in too small of a box.
Absolutely.
All right, Connor B, I'm going to preach a little bit about cattle real quick, and then we can bounce out of here. But find a little bit of stability here. Nice up day in the cattle market. Stock market bouncing back certainly helps. I think at the end of the day, though, on the cattle side of things, we've got to have the confidence to buy this market. The funds have to have the confidence to own this market. And box beef, to me, will lead that way. Which primal will take the reins? We got to get some leverage back in the feed yard. I think those are the two biggest things going forward is can we regain some ground that we've lost on box beef, and can we get past some of this heat and regain some of that leverage in the feed yard. We're seeing some premiums to prime for prime beef, prime cattle right now. Seasonality, it's that time of year. If you remember back in the spring, Connor, select was actually a premium to choice or flat with choice at one point this spring, kind of a weird trade anomaly. Today, choice is a $23 premium to select, and we're seeing about a $20 premium on that prime to choice spread too. So the market's paying for high quality beef out there, and that's just a plug for some Huck Angus bulls as well. Right? Gotta plug in them Angus bulls. But
I do when I'm looking at like SEP feeders, kind of we're right at the 200 day right now, aren't we? Kind of could be an important level.
Yep, nice retracement there. August is above the 200-day. Good call out there. September is right at it. That's a good point. Looking at your October contract, we're still well below it. Volume-wise, I think a lot of the volume gets pushed out. SEP has 20,000 open interest, so SEP is kind of your front month there. Good call out, Connor B. You're going to be a cattle broker before you know it.
Oh, no way.
Yeah. But feeders are your leaders, and up $4 today. It's good to see feeders. It's been a bloodbath in July. So I don't know about you, but on the grain side, July was a good month to get that second chance, that second wind. If add to some more positions. On the cattle side, just a bloodbath and pulling equity out of positions, managing equity, and goes back to that point of panic positioning of get in control, manage the positions you have on. There's a time to push. There's a time to be patient. What we want to avoid is that time to panic and get that out of our system. So,
yeah, absolutely. Well, did we miss anything real quick? I mean, the forefront is going to be USDA report next week. We're going to be trading weather headlines and a lot of price action. I feel like yesterday was a little bit technical in buying.
Mm-hmm.
I know we got some positive headlines, but it was a nice bounce. And so I think that's important to watch, like looking at November soybeans. So far, we bounced off the 100. We bounced off the 100-day, which feels pretty good. I think I'd like to see something like that. Hold those levels into the report, and then let's see what the data says. If we're hoping, which does a lot of good in this business, doesn't it?
Right. Yes. But I don't know. I'm sure you're the same way. You get that call Wednesday morning of the report. The report comes out at 11, right? Then you get that call at 8, 9, 10 o'clock, and a guy wants to place an order right before the report. Maybe keep an eye on where this market's at this week and into the first of next week. And if you like where we're at, if we're getting towards the upper end of one of these recent ranges, maybe that's the day you call to get that report coverage on instead of the last minute right before that report.
Yep, absolutely.
With that, anything else to add here, Connor B, before we roll on out?
No, we should have some. Well, we're going to do it right before the report, so we'll probably rehash some of the levels and stuff for next week. But that's going to be that should be on everyone's calendar, I think.
Yep, next week. Pay attention to the markets, and appreciate y'all joining me today. Weekend Wrap goes out every Friday. Invite you to head on over to my website, drop your name, contact info. If you're not getting all of our content, all of our info, you get actionable text alerts. You get the need to know market info without the noise. Doesn't cost a thing for clients. Head on over to my website. leave some info there. Connor B, appreciate you joining me. Connor B with agmarket.net. Thanks for being here. We'll see you next week.
Have a good one.